Welcome to Daily Tax Savings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is taxes before bankruptcy, and we have discussed different aspects of bankruptcy on this show. This episode is just to focus on the sequence of events that we need to focus on. So, first of all, when someone's considering bankruptcy, um, they're under stress. Almost everyone who comes to ask about bankruptcy is not thinking at their best, and the amount of information and stress can be overwhelming. Most of the time that I've been involved with the bankruptcy as accountant, the goal has been related to preserving real estate in one form or another, whether it's a family house or commercial real estate. It's often to buy time in order to restructure debt, sell property, or whatever to related to real estate. And that is a good, viable strategy for using bankruptcy. I'll interject a story I recall decades ago when this was during the mortgage crisis. It must have been around 2008, around then. A banker came in to speak with our Rotary and talked about using bankruptcy as a real estate investment strategy to save and restructure and eventually rebuild. And I remember some of the older members of our Rotary were insulted. That was unethical and an immoral way to do business. But the fact is that it is a viable strategy. There's a guy with a very prominent position in Washington, D.C., who's used bankruptcy a number of times in his real estate business. And in fact, my first business exposure as an accountant in bankruptcy was in his prior to his business bankruptcy of casinos in Atlantic City. So, what do we need to pay attention to if we are considering bankruptcy? Well, the first thing we want to clarify the goal of bankruptcy. And I should say that in most cases, my job is dual function accountant, that is often tax preparer as well as coach. So I'm essentially helping clarify strategy. So the first thing we do is clarify the strategy, and that tends to be the hardest part because there's a lot of push and pull and family members and business and other emotional attachments. So we need to clarify the strategy. The strategy is to save this building, save this property, save this house, or buy time to sell this property. Then that's what we need to do. After that is goal is clarified, what is the goal, and this is a viable way to do it. The next thing we need to focus on is getting the tax returns filed. If you're people that get in debt, often, very often, get behind in filing tax returns, and the bankruptcy application will ask, are all of your tax returns filed that are due and current and up to date? And if the answer is no, the application is going to be rejected, and all you've done is wasted time and money. So what I advise is don't dwell on people telling me, oh, I can't do my taxes, I don't have all my bookkeeping done. No, we need to get the taxes done. You hire someone like me that's good at getting taxes done in a responsible manner, even when the bookkeeping is not done. We can file with an alternate accounting method or do whatever we need to do to get legal, sustainable tax returns filed before you go to the attorney, whose job is simply to file those forms, come up with this, finalize the strategy, and file the bankruptcy forms after the tax returns are filed. So that's the point of today's presentation. We'd love to hear if you have any comments or feedback, if you've watched someone else go through this scenario and how it worked out, or if you want to talk with me one-on-one about a specific situation. That's easy to do also. Find me at taxproblems.cpa, and click the Let's Talk button. I'll be back tomorrow with another Tax Savings Minute.